Today, Bitcoin and Ether fall after President Trump talks about his tariff plans on CNBC. The CFTC says it's looking to allow spot crypto trading on registered exchanges. And James Gernetzke, CFO at Exodus, breaks down what helped fuel an increase in the company's digital asset treasury. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies and stocks pulling back today as traders digested weaker than expected economic data and new tariff comments from President Trump. Specifically, the president told CNBC this morning that tariffs on chips as well as pharmaceuticals were coming soon. As of noon Eastern, Bitcoin fell to the $112,000 level, Ether dropped more than 2% to the $3,500 mark, and XRP fell below $3. Taking a quick look at some crypto-related stocks, all are in the red as of around noon, with Coinbase falling the most by more than 5.5%. Shares have erased more than a quarter of their value since hitting a record close in the middle of last month. The sell-off deepened today after the company announced a $2 billion private offering of convertible senior notes. Okay, focusing on President Trump's interview with CNBC as we hit the top stories. The president responding to a report from the Wall Street Journal that he could order a probe into big banks for perceived discrimination. In an interview with CNBC Squawk Box this morning, the president was asked about the Journal report, which said he could sign an executive order that threatened to fine banks that refuse to work with conservatives or crypto companies.
Can you tell us about that executive order? What's in that? And what do you think the banks have done?
Well, they did discriminate. They totally discriminate against, I think me maybe even more, but they discriminate against many conservatives. You know, I told that story and sitting around tables with other people that were conservative or Trump supporters. I think the word might be Trump supporters more than conservative. And I believe what they did is they went to the regulators, the people that are surrounding the beautiful Resolute desk, you know, the high IQ people that are radical left. I believe they told the banking commission, the bankers, that the banking regulators do everything you can to destroy Trump.
Now, Trump didn't mention crypto companies specifically, so we reached out to the White House to ask about the reported executive order and whether it would focus on crypto companies too. A spokesperson told us the White House had nothing to add beyond what the president said on CNBC. Next, the U.S. commodities regulator says it's looking to allow spot crypto trading on registered exchanges. The CFTC announced yesterday that it's seeking public comment on a plan to let exchanges registered with the agency list spot crypto asset contracts. Right now, those exchanges are only able to offer futures contracts. Yesterday's announcement said the proposal was part of the CFTC's crypto sprint to implement recommendations from President Trump's working group on digital assets. That group dropped a report last week that suggested the SEC and the CFTC should advance digital asset rules at the federal level. And finally, a company offering blockchain-based home equity lines of credit is looking to go public. The company called Figure announced yesterday that it confidentially filed with the SEC to list on a U.S. exchange, with the number of shares and potential pricing of those shares to be determined. Figure lets homeowners open revolving credit lines up to $750,000, and the company joins a slew of crypto companies rushing to IPO in the U.S., including Circle, Galaxy Digital, and more. All right, for our main story today, Exodus Movement, a fintech firm offering a self-custodial crypto wallet known as the Exodus Wallet, released new details about its crypto treasury management strategy. I spoke with James Gernetzke, CFO at Exodus, about the increase in the company's digital asset treasury and other developments in the crypto space. The last month was a big month for crypto. We saw Bitcoin hit a new all-time high above $123,000, and the Genius Act stablecoin regulation bill became the first piece of crypto legislation to become law here in the U.S. First off, I'm curious for your take on what were some of the factors that helped Bitcoin reach that new record, and do you think Bitcoin has a potential to surpass that new all-time high this year?
Yeah, I mean, at Exodus, we definitely saw the same trends that you mentioned. We just put out our July volume numbers this morning, actually, and we definitely saw an improvement over previous months. So, we're seeing that same trend. I think that with the regulatory tailwinds that you mentioned with the Genius Act, it's really hard to understand and to get a full grasp of just how positive that is over the short, the medium, and actually even the long term, especially with the Genius Act codifying the regulatory environment that we see from the executive branch right now. So, our customers at Exodus and our users are, very excited right now. And I think that the Bitcoin rally, and there's obviously, as Bitcoin always does, it goes up and down. We're very accustomed to that, especially at Exodus. We've been doing this for 10 years, but we do believe that over the long term and even the shorter term, we'll see some Bitcoin continue to rally.
Yeah, and I want to focus on that big milestone last month, stablecoins becoming regulated here in the U.S. What do you think will change for the tokens now that there is a federal framework in place? And will anything change for your crypto wallet, Exodus?
I think that what we'll see in general is just more and more folks coming into the space. I mean, you've seen announced stablecoin issuers, people that have decided they want to get into the business. I believe there was, even Chase and JP Morgan types and Bank of America, if I recall correctly, announced that they're looking to get into this. And then you see even rumors of Amazon and the Walmarts of the world, considering stablecoins. So, we think that this legislation really provides people the comfort that this is something that we should absolutely get into. And it will have a lot of positive impacts. I mean, it's modern technology that's, frankly, in the United States, our financial system technology has just been stagnant for, 30, 40, 50 years. At Exodus, we're well positioned for this. We already support over 40 different networks and all of the major stablecoins. So, we're more than welcome. We're more than willing and able to add, all of the different coins, the Amazon coins, the Walmart coins, the Chase coins, on any of the different chains, Solana, Ethereum, et cetera. So, we are absolutely loving this, this trend. And, we think it's just going to change the world, and we're here to help.
Speaking of trends, we have been hearing a lot recently about Bitcoin reserve treasury strategies. In fact, Exodus has its own treasury management strategy. And according to your most recent release, which dropped today, your digital asset holdings include 2,087 Bitcoin as of July 31st, an increase of 29 from June. Exodus Movement also has 2,742 ETH tokens on hand and more than 34,500 SOL tokens, an increase of more than 2,700 from June. What prompted Exodus to increase allocations to those specific cryptocurrencies, and why the biggest increase in Solana SOL token? What was the reasoning behind that move?
We're rather unique. So we generate our digital asset holdings from our operations. So Bitcoin, for example, is the easiest. At Exodus, if you want to work at Exodus, from the beginning of the company 10 years ago, our founders decided that if you wanted to work at Exodus, you needed to be willing to take your salary in Bitcoin, really commit to the digital asset ecosystem if you wanted to work for a self-custodial digital asset wallet, right? And so our largest expense as a technology company is, of course, salaries. And so our largest expense is actually paid in Bitcoin. And we earn, roughly 2/3 of our revenue in Bitcoin. So when you see growing Bitcoin holdings in our treasury, unless we, state otherwise, in general, it's generated from, we grow our treasury from having more revenue than we do expenses. And so, our ETH and our Solana holdings are generated from primarily from a staking revenue, whether that is from the staking platform that we have on Exodus that our users use, or whether it's just from staking our own treasury assets. So we saw an increase in Solana, especially. There have been some slight changes that we've made, and we're really happy and pleased with, and our users are actually very pleased with the staking of Solana on our platform.
What do you think about the crypto treasury strategies several public companies have been implementing, especially lately? Do you think the trend will continue, or do you think it will kind of die down?
It will. I think that as long as people are willing to pay a premium, it will continue. But for the short term, right? In the longer term, I think the world is really starting to see, and just to take Bitcoin, for example, I think the world is starting to see the power of having Bitcoin in your treasury, especially in an environment, the macro environment and that we have lately, and the understanding of of things like debt and fiat and money printing and just inflation. The world has been very different the past few years, and I think that retail people, people buying steaks and hamburgers have figured out that the impact of inflation. But I think corporate treasuries now, with the regulatory environment, I think just in general, you see more and more corporations, go into a digital asset treasury strategy of some sort simply for the inflation hedge.
As we noted earlier, July was a great month for crypto, but August got off to a shaky start following weak jobs data and the president's new tariffs. He just made more tariff-related comments today when speaking to CNBC. Major cryptocurrencies are down today, too, as of noon, after a little reprieve yesterday. So I'm wondering if you think investors should brace for a continuation of what we saw to kick off the month, as traders might consider offloading risky assets, or can we expect things to reverse course?
I think the beautiful thing about crypto markets, and I suppose somewhat about President Trump too, is its predictability is very hard. So I think if you've been in crypto for a little while, you are ready for anything. And so I definitely do not give predictions other than in a longer term horizon. So I think that if you are a believer in crypto, you should always be buying. And if you see the market the way I do, you definitely want to consider getting in and buying dips. But I am not in the business of giving investment advice. So.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.